The Income and Expenditure Form, or the SEC MMRF 02, is intended to capture information on the income, expenditure, and, where applicable, extraordinary income or expenditure of the reporting entity. It is important to note that the manager of a CIS is also required to complete this form for each CIS that it manages. Where a CIS issues different classes of units or shares, a separate SEC MMRF 02 must be completed for each class or share. This form, in general, is synonymous with a traditional income and expenditure statement of a company, with the exception of a few line items which we will highlight. The brokerage and commission line item represents the revenue derived from arranging and/or executing transactions between buyers and sellers or on behalf of a buyer or a seller. The underwriting fees line item is intended to capture all revenues derived from underwriting activities, regardless of whether such activity is performed on a full or best efforts basis. For the corporate finance fees line item, the reporting entity is required to input all revenues derived from providing services to clients such as funding arrangements, capital structuring, and management consultations. The trustee and custodian fees line item requires the reporting entity to input all income derived when it acts as a trustee, custodian, or administrator for its clients. The increase in value of securities line item represents the total unrealized gains from changes in the market value of own book securities, where such gains are recorded in the income statement. A section to capture management fees has been included. Under this section, you will see a line item for portfolio management fees. The reporting entity is required to state the total revenue derived from managing a portfolio of assets on behalf of clients on a discretionary or non-discretionary basis. For the purposes of this form, portfolio assets refer to clients' assets, securities, and cash. Incentive or performance fees relate to all revenues derived from achieving or exceeding performance-related targets established by clients. Under transaction fees, the reporting entity is required to state the total revenue derived from any fees associated with transactions on a client's portfolio which are not brokerage or commission fees. The brokerage and commission expense includes all brokerage and commissions paid to broker-dealers as a result of the reporting entity's management or execution of transactions for its portfolio of own book securities. Diminution in value of securities intends to capture the total unrealized losses from changes in the market value of own book securities, where such losses are recorded in the income statement. Interest expense, non-repo, includes all interest expenses incurred by the reporting entity on all borrowings during the reporting period. This excludes interest paid on repos. The total value of all repo interest expenses incurred during the reporting period is required to be stated in the repo interest paid line item.